Hi, and welcome to the third quarter market update. My name is Jason Gunkel, and I help lead our investment team here with Syverson Strege. Can't believe another quarter is coming to a close. This one has been a little more of a roller coaster ride. However, we do seem to be ending on a positive note. The U.S. stock market, represented by the S&P 500, is up close to 3% for the quarter, and year to date up over 20%. So there's still a couple weeks left until the end of the quarter, but let's hope your statements still show some positive returns for the quarter. In August, we did get a big market drop that you likely noticed. The Dow dropped 800 points in one day. What caused this drop was some weak economic data being reported, mostly out of Europe and China. And also, the yield curve continues to make headlines as inverted, meaning short-term rates were higher than long-term rates. And as this chart shows, a yield curve inversion can be an indicator that we are headed towards a recession. It often comes before a recession. However, the lag time is very inconsistent. And in addition, the U.S. stock market can still perform quite well before a recession hits. So it's not a very good indicator of how to trade in the markets. It's also important to put this drop that occurred into perspective. So an 800-point drop in the Dow today is about a 3% downturn, whereas if the Dow dropped 800 points 10 years ago during the financial crisis, that would have been about an 8% drop. The markets luckily did recover in September, and again, it was trade talks, particularly with the U.S. and China, making headlines. It was positive news. Just a couple of days ago, China announced that it is not going to impose additional tariffs on soybeans or pork. This is great news for U.S. farmers, also Iowa farmers. As harvest time is near, hopefully we get a boost in some egg prices. Also, company earnings have beat expectations. So most companies have reported their second quarter results, and about 75% of U.S. companies have beat expectations. So while earnings have been relatively flat compared to last year, beating expectations has still boosted the markets and has been a positive sign. As we look ahead, there's no doubt that trade talks and also actions by the Federal Reserve will continue to dictate market movements. The Federal Reserve is meeting this week and is widely expected to cut rates by another quarter point. What they're looking at are the leading economic indicators, and this chart shows a long list of them. And the main takeaway here is that the current level of these indicators is still pretty strong, and it shows the economy is on pretty stable footing. However, the Federal Reserve is looking at the direction, and the direction of these indicators is downward. So there are some signs the economy is slowing. We could be moving towards a recession. We have been proactive as an investment committee to position your portfolio correctly. We've been focusing on high quality companies, those with strong balance sheets, strong earnings that are more resilient to the possibility of a market downturn. So we feel good about where your portfolio is positioned. Let's hope we can close the year out strong and quarter four is less of a roller coaster ride. Thanks for joining us, and we'll see you again in December.